Hey everybody, Derek Christensen here, and I wanted to talk to you about life insurance and estate taxes. But before I dive into that, I want to let you know how to reach out to me. You can find me in my email, Derek, D-E-R-E-K, at legionlawpllc.com, or you can go to my website directly at www.legionlawpllc.com. So with that, let's dive right into the topic. It's a fascinating topic of insurance and death. Now, they say that death and taxes are the two things that are going to happen in life, and oftentimes if you have a lot of money, those happen at the same time because there's something called the estate tax. The estate tax is not a fun tax to pay. It is about probably 40% of every dollar worth a certain threshold that is set by the federal government. As of right now, the shooting, it's $12 million for an individual, $24 million for a couple. However, if the Trump tax cuts are not extended or modified in any kind of way, then the first day, I think, of 2026 is whenever the exemption amounts will get cut in half. So any individual that's worth more than $6 million or any couple that's worth more than $12 million in net worth is going to be subject to the estate tax. And that means that every dollar above the exemption amount is going to get taxed at around 40%. And that is something that the estate will have to pay in order to make sure that the IRS doesn't get all upset. So that's pretty much the estate tax in a nutshell. However, there's a great strategy to avoid that, and that's called insurance. So obviously we're all going to pass away one day. Knock on wood, it doesn't happen to me, but I think, I'll be the first or second person to ever avoid that. But in the meantime, just to make sure I'm avoiding that and hedging my bets that I'm actually going to pass away one day, I should get insurance. And insurance is going to come in the form of the life insurance because once I pass away, that's when I need to worry about paying this estate tax. So again, if you're worth around $5 million or if you think that you're going to be around $6 to $12 million whenever you are near retirement or about to pass away, when you're in your 60s, 70s, 80s, you should strongly consider life insurance. And the reason why is because this will be one huge lump sum of payment that can either go directly to the bill that you owe, the estate tax bill that you owe, or if the exemption amount is higher and you're below that exemption amount whenever you pass away, that money just simply goes straight to your beneficiaries. You can give it to your children, you can give it to your spouse, to whomever. So I see it as a win-win. It's kind of a no-brainer, especially when you're in those lower, near the threshold situation. Now, if you are well above that threshold, that's a different story. Getting a $30 million policy is pretty tough to pull off the right way. And there are other advanced strategies out there, but like I said, there's normal estate planning for 99.9% of the world, and then if you're in that really, really small upper threshold where you have a lot of money, then there's advanced estate tax planning. But 80% of the problem can get solved with 20% complexity in this circumstance. If you just have life insurance, it is a great way to hedge your bets, to say, I don't know how much I'm going to have, I don't know how much I'm going to be near that threshold, and if I'm near it, I think I'm going to go for it. And if that insurance doesn't cover all your bill that we can estimate, then that's when you need to get even further into estate planning, where you can do irrevocable trusts, you could do family partnership agreements, you can do all sorts of different things that create a way to lower your estate tax bill. So my strong recommendation again is either get life insurance for yourself directly and your spouse, or you could also do something called an ILIT. And this is actually a video I'm going to create later on, but an ILIT is an irrevocable life insurance trust. There's so many acronyms in the estate planning world, sometimes it's hard to keep your head straight on them. But irrevocable life insurance trust is essentially what you do is you create a trust, you transfer some money into it as a gift to your kids, and then you use that money to pay for the life insurance that the trust will own. The trust will take life insurance on you, and then they pay the premiums via the gifts that you give the trust. And then whenever you pass away, that life insurance policy will go inside the trust and then follow the rules of the trust. The rules of the trust will often say, pay my estate tax bill if I have one, and if I don't, then give it to my kids or to whomever in these split up shares or whatever. So that's how you do it. That's an ILIT, and then also you can just do it in your own personal name. You don't necessarily have to set up a trust like that and take care of it. But there are pros and cons if you do it in your own individual name versus the ILIT. But either way, both are going to require some kind of life insurance policy. So if I were you, I would strongly recommend talking to someone like myself about pros and cons. Do you even need it in the first place? How much do you need? All that good stuff. And also, in that threshold, I would strongly recommend talking to a financial planner and an accountant at that point to make sure that everything is set up perfectly so that your bill does not come out of your estate. In other words, you have the insurance company rather than you pay for the taxes that you will owe after you pass away. So again, if you have any questions on that, or if you want me to connect you to anybody in my network, accountants, financial planners, stuff like that, be more than happy to help. Feel free to reach out. Commentary, you want to tell me how terrible my videos are, how amazing they are, great. I'd love to hear it. You can email me directly, Derek, D-E-R-E-K, at legionlawpllc.com, or you can find me on my website, where you can go to our Contact Us page and schedule a free over-the-phone consultation directly onto my calendar at www.legionlawpllc.com. So with that, thank you so much and have a great day.